Nikki, with the European economy in the state it's in, it's a difficult operating environment for a lot of companies. And obviously one way of judging how difficult it is to look at one particular company. Infineon, the German technology company, has reported its full year numbers this morning. It's a tough environment, clearly, even looking at the numbers.
Yes, that's right. Infineon's a good company to pick in that it's Europe's second largest semiconductor maker, but it supplies very heavily to the automotive sector, to big capital goods manufacturers like Siemens, out of which it was originally born, and also to the sort of security chip card sector, that kind of business. It hasn't, I mean, if you looked at the results, you wouldn't think it was doing too badly. Revenue's down about 1% between the quarters. But the real problem is going forward and where the automotive sector is going to go. In particular, automotive is not so bad. I mean, they are assuming some growth next year, and also semiconductor content in cars is increasing as cars become more sophisticated and people concentrate on fuel efficiency and things like that. But the real problem really is the sort of industrial power sector where the book-to-bill ratio is down to 0.5.
Absolutely, it's incredible how dependent all of these companies are on one another, and all of these sectors are very dependent on each other as well. I just wonder whether we're not going to see any light at the end of the tunnel as far as the power industry is concerned, as far as as you say, automotive holding its own, I guess, but still looking, the European automotive sector is in fairly bad shape, generally speaking.
Yes, in fairness, that's partly at the volume end of the market. Well, I mean, obviously it does have an impact, but at the premium end things are a bit better. China is a bit better, and about 30%. I've seen estimates about 30% of Infineon's chips eventually, directly or indirectly, go via China. So the automotive I wouldn't worry about too much. Power is really horrible. The company overall thinks that things will trough basically in the first half of its current financial year, which started in October. And then some demand improvement in the second half, and margins down, but basically improving second half to first half. Now, whether that's optimistic or not is really the big question. And it's very, very hard to tell.
It is, and I think there's a danger that companies may be too optimistic as well, given the renewed concerns about Greece that we've had over the last few days, and no real pickup in economic activity that we've seen. I mean, industrial production is again stuck in a rut, as we saw in the last couple of days from numbers. I think that the operating environment for European industry as a whole is probably not going to improve at all, at least in the next 6 months or so.
Well, I think that's probably true in these sorts of sectors, certainly in capital goods, yeah.
Okay, tough times for European industrial companies, but if they can hold their own, they should be doing reasonably well within, say, 6 months. Thanks, Nikki.